Welcome aboard the Litiverse, everyone. So this is, of course, your last chapter in the Lit adventure. However, it is a pretty crazy one. We did utilize the Lit madness, as you can already see on my screen, and technically you would have known about this before you get to this video. So in that sense, what we will be doing is covering a very nice pair, or example, should I say, and we have covered a variety. I will be covering US 30. I'm not sure what Camel Ream actually covered, but again, the whole point in this is showing you a variety of different pairs, different examples, all within the lit pairs though. So that's really important that we do cover the pairs that we consistently have been covering to encourage you guys to actually trade them. So just before I actually do go into it, I wanted to mention that a lot of these planets that you see, you would have known by now what they are. They don't always present. So sometimes you may get a very nice New York Trap trade, but London Open wasn't nice. Or London Open is nice, but New York Trap isn't nice. That's completely fine. But the whole purpose of this is pretty much almost all planets can be used daily. There's certain things like higher time frame, not necessarily, but the rest of it, all the intraday planets, pretty much every day. So yeah, it's important you do understand what these planets are. We will cover them briefly as we get along to it. So if I actually do get straight into it, we have got the 4H chart on US 30. Now I know I've chose 4H because technically we are using the H1 when it comes to the planet of the higher time frame identification. However, in this case, H1 wasn't so clean to me, so I went on 4H. You can also do that, of course. Change the time frames as you wish on the higher time frame, whether it's 30 minutes. I would say 30 minutes is the minimum highest time frame, and 4H maximum. I wouldn't go to daily when it comes to this. So 4H made a bit more sense when I could identify direction. Again, something to do with POIs also, which interested me on this time frame. So yeah, flicking through a couple of time frames is key so you can generally understand a clear picture if you don't already. So in this case, what can we already see in front of us? We can see the 4H POI over here. And it was mitigated. You can already see it's been mitigated over here. So with that being said, I actually want to basically cover something very interesting in this specific example. It's actually taken a pullback, and it's a pullback on higher time frame, but on intraday, it's perfect. It's the perfect intraday cycles, but on the higher time frame, you'll see it as a pullback. And this is where I think a lot of you guys get confused with higher time frame implementation, is that you could be trading a perfect intraday play, and on the higher time frame it looks like a pullback. And usually this is like hindsight stuff. Like, you don't need to be looking at stuff like that, or like, again, like what you see in front of me. Again, I'm marking this up in hindsight. As you can see, it's already played out. It's not like I waited for this reaction and whatever, I took the trade, blah, blah, blah. The whole point is this is we are actually utilizing our understanding that price has reacted here. It's made a reaction all the way down here. Technically, it's kind of mitigated there, which looks nice for smart money traders. Stop loss, not so nice, I would say. That's a pretty crazy stop loss. The chances are on intraday, that probably would have been a very nice trade. I can't tell right now with the screen and the fact we don't actually have the template. I really do go by the template a lot by making my eyes a little bit easier to see things, but I can't really tell without it. 4H doesn't really utilize the template, at least in my settings. I think it goes to 1H for me. So anyways, regardless of that, what I want to talk about is pullbacks, specifically when it comes to higher time frame and what you can see here. So if I just clear that up a little bit, it's a little bit of a mess. You can basically see that price mitigated here, reacted here. Most smart money traders would not have guessed this is a pullback, because look what happens. Price continues bullish, and maybe they expect it does some sort of order flow like that and continues bearish once again. That's usually I would say the kind of like the strategy they use. I don't know the exact strategy all smart money traders use. They utilize structure and all that stuff as well, but that's generally the idea they may expect. And this is why you see wicks like this, because this is where price is essentially reacting from these areas, and so many smart money traders are getting induced here. They're constantly taking sells. They either wait for the first wick or whatever strategy they use, but the chances are they would have taken a limit entry in here and just let their stops right above here. And in this case, what they don't realize is that price may react down here, for example, or they may be at break even, but the chances are they're never really understanding the market. And this is the thing that I want you guys to understand, is not get lost in a higher time frame. None of us use it. I think you guys probably know that by now. So there's no need to be asking us questions with that when we don't even utilize it. You don't need to understand higher time frame. In this case, I'm kind of using it against higher time frame because I'm actually trading a pullback in this case. So if I just clear that up again, and let's just speed things up a bit more, because 4H isn't really showing us much. So I do want to go on the lower time frame, or slightly lower, and that is the 15M. Now on the 15M, this wick over here is actually that 4H reaction over here. So that's the same thing, just so we can actually understand both charts here of what's what. Now this stuff going on here, I would say it pretty much, comes from here, the previous day, right? And it makes sense when you look at this, like traders are getting in on whatever wicks these are. These could be on the 30M. I'm not entirely sure what they're trying to trade here, but you can clearly see price has reacted. Even the previous day in New York, again, we can confirm that with our confluences in lit and not random higher time frame stuff. Now, what I want to look for is basically an inducement high of relevant liquidity, how I can trade away from it when it comes to intraday, because chances are this may get induced. People don't realize that, where price has already induced a bunch of liquidity low down here. All of this liquidity, this is drawn very, very briefly. Of course, you need to go a little bit on the lower time frame to understand that a bit better. We've had a perfect inducement low. You can see that vector candle over there. Chances are we're going to induce high. We're going to take out zones like such over here. So it's super key we understand we're in the right side. And the only way we really need to understand is understanding intraday. The rest doesn't matter. If you don't understand price action some days, it's okay, then don't trade it. But in this case, it's going to make so much sense on intraday, and hopefully you guys can basically eliminate the higher time frame problems you may have, because it really does not matter. So let's clear that up a bit. Oh, let's draw that back again, actually, that one. So that is H4, basically, the wick that we have. Asia is, well, very small in this specific example. So let's actually understand if there's something else we can maybe look at. So for example, in this case, it's a bit tricky to see on my eyes, but what we can see is potential 15M POI. We are narrowing it down from the 4H over here down to the 15M POI. Again, I'm not so keen on this. I really don't care that much if price reacts in here or if it reacts above it. Ideally above it is even better. But my concern is that as long as my confluences line up on an intraday level, I really don't care what happens here, as long as we get some sort of inducement. What usually happens when you get the reaction within the mitigation zone, which is great for smart money, is that there was enough liquidity going up. It was induced. You get the vector candles, and you've basically got a cycle completion. When it induces higher than that, it's usually when there's not so much liquidity, and essentially the mitigation would become liquidity. It's a little bit tricky to explain, but that's where basically the smart money traps get into play. And this is why when it comes to the start of the day, I'm not too concerned with what's going on. I want to look at the fractal element of the lower time frame if we can identify a smart money trap within our little 5-minute range that we can see. Let's clear that up and let's go on to the next planet, which is Asia range. Now, you did already see Asia range here on the 15M, but I think it's super, super key that we actually check it properly on the 5M over here. So on the 5M, we can identify it much easier. It's pretty much in front of our face. So there's not much more to say to that when it comes to the 5M Asia range. Now, Asia range, as you can see. What we will do now is actually basically expand the 5-minute chart. It's a little bit tricky to see when it's this small, because now we're going to play on to the 5M pretty much for the rest of this example. It's based on 5M, some bits of 1M. So now we can completely throw away 15M stuff because we don't really need to use that right now. So let's click on the next part, which is a little bit of a bigger view. So I've expanded the view so that you can actually see previous day. Couldn't really see it in the previous example. The reason I did this was it's basically our important guide of understanding where liquidity is and POIs, smart money traps. We technically obviously need to see this. So super important that you do at least look at 1 day before. Depends. It really is going to depend when I say this, because sometimes there's days where price doesn't move so much. So you can actually go back and look at 3 or 4 days. Again, this requires your mind to kind of work. I can't really tell you an exact guide. You just need to look at price action and the volatility that's going on. In this case, price action was pretty nice the previous day. So what I will actually do first is actually understand cycle identifications. This is super key. You understand some sort of cycle identification in the beginning of the day. And what this aligns with is also which direction is Asia likely to induce. Is it going to induce high first or low first? And this is why cycle identifications come into place. Now, usually with cycle identifications, it does come at Frankfurt. I'm kind of skipping ahead there. But the first thing we actually really need to do here is understand where price can potentially head. So with that being said, we have drawn a bit of liquidity, as you can see, only within Asia. I'm only focusing specifically as the first market intention of the day. Will price induce high or low? Now, what's really key to understand is pretty obvious in my opinion, but maybe you don't actually really utilize it like this, is where is price right now? Or where does price quite literally end at Asia? Like, where is it in the Asia range? In this case, you can already see over here, it's actually pretty high in Asia range. So you can already probably answer a question there of yourselves that Asia might induce high first. You've got so much liquidity going on here and the equal highs. It's pretty much piling on. This is a perfect example of liquidity where there's so much liquidity. We can likely expect price continues bullish and of course induces. Now in this specific case, we also have midline. Now my midline for some reason disappeared. I'm not sure where it is, but we will bring midline up again as the potential cycle identifications we do get. We can have the Fast and Franctorious, which does involve Asia midline. Let's try to draw a nice line. That's decent. A decent line at Asia midline, potentially mitigating probably there where price goes in midline, continues bullish to induce high, and then you expect reversal. Or you can simply get the Frankfurt open trade where price actually straight induces high in Frankfurt and then reverses. So we can expect one or two things. So these are the cycle variations that you should expect in the beginning of the day. Our confluences are lining up. We do have a little nice POI. It may not tap it perfectly, but that's okay. I wouldn't necessarily take it direct. And my bias is for sales anyways. And I'll tell you why a little bit later when it comes to confluences. So first things first, I do want to identify more than just the liquidity we have here. Is there anything else we can identify in line with where our inducement may head? Does it induce this high? Does it induce this high? What kind of inducement can I expect? Because remember, when we're just inducing outside of Asia, it is a minor inducement. We need technically a medium inducement to take a trade because that's where the strength lies. And I know a lot of you guys do kind of try to complicate it for yourself when it comes to that. Make sure it's always a medium inducement at first, like that's your absolute minimum. So what we also actually have in line with liquidity is a smart money trap. Now, why is this a smart money trap? Remember, timing, a little bit tricky to draw here, but this is probably around 10 o'clock. This is UTC plus 2. I think it's plus 1 actually at the time of recording when it's the 28th of March. So forgive me if I'm a bit wrong on my timing over there, but that looks like 10 o'clock or something like that. And that's pretty late in the day. So the chances are this is pretty much a liquidity target for price to induce high. So I see this as a smart money trap. Definitely will not consider it as an entry, even if it reacts. Again, I always mention this. I will wait for a sub reaction anyways. I want those additional confluences. So we have potential Fast and Franctorious play going on in front of us. So this is a nice little diagram that I did there, but it's basically the same thing that I just drew where it mitigates this point here, possibly reacts in the smart money trap. It could even be lower like that. Could give a bigger reaction, but the aim is to induce high quite a bit. So that way all of this liquidity is being taken out. So next thing is Frankfurt on our planet. Now I have specifically chosen the Fast and Franctorious baby planet, I would say, as my case here. It could be even a Frankfurt Open. Again, I'm more keen on the Fast and Franctorious based on the confluences we have, such as the midline here. Now I'm just waiting for my midline to appear all of a sudden, which it will. Hopefully it appears now. So you got your midline drawn by me. I did make sure it is 50-50 when I was drawing this, because again, I'm not sure where my midline went at the time of doing this. So we've got Asia midline. It lines up perfectly actually with that little POI. And even on a very fractal level of liquidity understanding, it basically creates a very baby cycle or mini cycle, whatever you want to call it. I don't know why I did that curve, but it's basically liquidity to the downside into the POI and then for price to induce high. And this in itself is a little mini cycle. So let's go on the next slide. And what we have is price almost tapping Asia midline. Again, I will still consider it fast and fractorious. I'm not so keen on taking it though. And the reason why is I need a lot more confluences. Sometimes they're pretty clear, especially if your Asia range is a lot bigger. In this case, Asia range is pretty tiny. Look at the day before. It's probably like 4 times the size the day before. Or like the day before is 4 times the size of this day. So I'm not so keen on price specifically hitting something or for a specific entry. As you can see here, the price action is just much easier to visually see. So I'm not keen on basically taking a fast and fractorious trade, but more so the understanding. As I mentioned, it's the understanding that's super key. So with that being said, we also have target identification. If I did, for example, take the trade here, where is my target? Now, I did mention I expect smart money trap, so that will be about here. Now, what else is remaining? We have got yesterday's high also. Technically, we've got about 3 elements going on here, which is very strong liquidity. You've got yesterday's high, pretty weak high. It comes from whatever, 9 o'clock, pretty random. You've got your smart money trap there, and you've got a huge bunch of liquidity going on in Asia. So you've got your minor inducement target and your medium inducement target. So roughly I can expect the little drawing that we had before, which was actually something like this. Let's redraw that, something like that, where price induces yesterday's high as essentially the final intraday target. Before we actually continue, is there something to the left? Now remember, I did mention higher time frame, we're not going to use it again, but in this case, we did mark up actually a 15 MPOI, so that also will line up somewhere along the lines of yesterday's high and in between this little gap, something like that on average, where the 15 MPOI is above. As you can actually see here, this is a great example. So this is yesterday's high. This is yesterday's high on the 15M. So you can see it's ever so slightly higher than that. So that does seem like a reasonable target going into the 15M. Now, I wouldn't consider 15M actually higher time frame. It's still technically more intraday, but it's our absolute highest time frame for intraday understanding. As you can see, you can just see price action so much better on this. So being said, we have our perfect reaction. Again, it would have been a beautiful trade. Technically, you could have taken that. It could have likely been a let. You can backtest this. I'm not entirely sure, but I think it could have been a let potentially. But again, I'm being very, very picky when it comes to these Litiverse examples. So in this case, the smart money trap didn't give any reaction whatsoever. It actually just hesitated. Pretty crazy actually like that. Only created a channel that helps us in our bias for sells soon. But yeah, what we can see is perfect vector candles. Again, the inducement is absolutely perfect in this specific case. Now, with that being said, let's actually check the 15M. Did it tap into the 15M? So we have a nice little screenshot here of basically this wick. This is a 5M. As you can see over here, it's 5M, just for reference. This is 15M, and you can see the wick tapped in perfectly to this little mitigation going there, or big mitigation, as I should actually say. So that is perfect. Price mitigates very nicely. You can consider that extreme mitigation. I wouldn't recommend it though. Based on stop loss, it's really not great. So with that being said, what is our next planet? It is London Open, or London Open Cup, as you can see with the C going on there. Now, we are actually lined up with that perfectly, as you can see here, with it being 9 o'clock. Let's not cover that. With it being 9 o'clock in the morning, based on UTC +2, or Berlin time is probably the best thing to say. So yeah, don't get confused when the whole time change happened. And this lines up perfectly. So right now it would be almost London close, maybe like a minute or so off, or 5 minutes based on this chart. And we can, of course, go on to our next stage, which is London Open Cup. Now, if we go next, what we can actually see is also high in time frame. So we ticked off higher time frame over here. it's tapped in there. If it holds, of course, that really depends on price action, but we can technically mark off the higher time frame POI confluences that line up in London Open, because it is coming up to London Open. We've got that timing there. Everything pretty much lines up perfectly to the planets. Now, next thing is extreme limit entry. Did we not technically tap the extreme limit entry over here? Well, we did. So we actually marked up pretty much 3 planets all at once in one little example, which isn't even our confirmed trade. Like, I literally said I don't actually recommend this personally based on stop loss. Again, risk reward is key. So it's kind of funny how it still lines up pretty nicely. But yeah, I would focus on the lower time frame stuff, which is coming up. Don't worry. It will be based actually off this reaction over here. We want to now look for the nice juicy trades that potentially can occur after that. So next stage is understanding what's going to happen in London Open. Now, if you remember the juicy planets going on, we actually have that Bailey going on in the second stage. So we have Bailey over here. We have rated for London Open. Again, the reason I waited was to wait for a reaction by which we can utilize the Bailey, being the break of structure mitigation over here, extreme mitigation after higher time frame POI mitigated, lead mitigation, and EDM after break of structure. So we want to essentially check off these points to take as many trades as we can in that continuation. Technically, extreme mitigation has occurred, so we can kind of take that off. But the first thing that we're seeing right now in front of our eyes is actually a potential break of structure. But before I continue that, the one thing I have to stress, let's just pretend this didn't happen, is understanding, is there a potential lit cycle in place? Now, what I mean by that is, of course, can we identify the intentions? Remember, market intentions are super key. So we are kind of stepping backwards a bit before we consider sells. Is there anything in place? Now, we did obviously mark up Asia low over here, but is there anything more? We want to mark up as much liquidity as we can to understand where price can potentially induce, and that helps us with targets and so on. So in this case, can we identify an intention for a lit cycle in direction of our sell bias? You've already got one that I marked up there. The next one, what we can potentially see is actually, well, before I continue actually, is what can you potentially see? So you can pause the video. When it comes to outside of Asia, let's just move that out of the way. What here can you see? What kind of liquidity is this? Now, it might be a bit of an interesting one because I actually have smart money a lot in my head. So when it comes to liquidity, it's not always your trend lines or your breakout traders, your equal lows, equal highs, support resistance, whatever you want to call it. It is also smart money. And the way you will notice that in this example is actually like this, where you just take up mitigation POIs, especially when they look like this with the whole order flow going on. Chances are they will be taken out on an intraday basis, and they do form liquidity. Now, what's crazy about this is a lot of smart money traders do this. So they enter mitigations, they enter this one, then they enter this one thinking, great, I've stacked entries, and they show off and everything. And they hope it's kind of skyrockets. They'll hold it and assume it will continue. And the chances are they will just give you at break even, or at worst, actually at a loss if they don't even do break evens. So yeah, it's kind of crazy. It's pretty interesting to understand when you really understand smart money traders and their psychology, which is just hold it forever kind of thing. Yeah, but with that being said, we have got a bunch of liquidity going on there, which is super, super nice. However, is there anything else? Is there anything else we can mark up aside from the smart money liquidity? So what we've technically marked up covers down here as a potential target. Let's extend that or something like that. Imagine that's a straight line, of course. So do we have something down there? Is there anything lower, possibly down here or whatever over there? Technically, yes, we have got a little channel going on there. So this is why having an eye for detail is super key, because this channel is pretty nice. Now, from intraday, this is where I would actually leave it, because keep in mind, with Asia being over here and price making a nice high over here, for price to come all the way down, mitigate, can be possible. I'm not going to say it's impossible, but I want to be realistic and actually understand liquidity inducement intentions as opposed to POIs. So for me, that will be my absolute last target. That would be my aggressive target, essentially. So other than that, it would technically be the POI over here. There isn't a major difference when you look at that gap between. It's not too major, so it will have to depend as we are, of course, progressing in the day. If price reaches this, only then can we really understand what's going on. Right now, I'm saying a lot of things that haven't even occurred, but it's important to always be fluid and understand things. So let's clear all of that up, and let's actually go on to our Beely again. So back to the Beely over here. The first step we have is the break of structure mitigation. Now, I think I did mention it, or maybe I skipped past what I was trying to say, and we can technically see from London Open over here, little break of structure. It's a bit tricky though on the 5M, so we'll actually bring up the 1M, as you can see right now on the screen, and on the 1M you can actually see a potential break of structure around there. It's not very specific. Again, I didn't really use structure at all, so I'm not really too fussed on stuff like that, but it's a relevant break of structure, as we would say. Again, draw a better line. It's like such. My line is slightly off there, but nevertheless, it's pretty much similar. But look how perfect this is. See, this is why like looking at 1M and 5M simultaneously can really help you understand the picture. Look at this. This is that really nice channel build-up that you see here of the smart money trap reaction. The vector candles look so amazing here. And you pretty much get a perfect example. I don't know what else to say, really, because it occurs in London Open. You get the perfect to-the-minute London Open inducement high where price reverses. I don't know what else to say, really, to be fair, because it just couldn't be more clearer. There's nothing really more else. You've been taught this like 1,000 times probably at this point. So yeah, important to always take trades like this. But yeah, with that being said, we've got the break of structure mitigation checked. What is the next one? Extreme mitigation after higher time frame POI mitigated. So let's say that again. Now, if you remember that 15M that we had going on, I'm not sure why I'm drawing that, but let's pretend it was something like that, and you saw that image where price wicked like such, and then whatever goes something like that. Oh, my drawings. Apologies for that one, but that would be actually your absolute extreme. What this is the higher time frame POI mitigated. Now, in this case, the Beely, the E is the extreme mitigation after that. So after this reaction, what is the extreme mitigation? Again, these are technically the different entry approaches, not necessarily specific to what you see on the checklist. Technically, it is a type of entry approach that we do like. So in this case, what you can see, it does line up pretty nicely with our analysis to see an extreme mitigation. Now, to be fair, it's not necessarily extreme as in extreme, my mouse, extreme up there. It would be considering this extreme down here. So basically this one here. It's the only imbalance, the only mitigation left. So that's pretty much your only extreme, if that makes sense. So I would take that. So yeah, I would say it's there, and you can see beautiful word extreme is there also right now. But yeah, oh, I'm out of breath at this point. Gosh, I realize I talk way too much sometimes. We have got our next step, which is let mitigation. So can we also potentially line up let mitigation in line with this POI? Now that would be pretty extraordinary when it comes to all three of these lining up. It would be pretty extraordinary. Just remember, you're not always going to have all of them. You can have one, or you can have two. You can have, I'm not sure about four when it comes to EDM and LETs. Sometimes they appear in pretty interesting ways, but usually not at the main inducement. Remember EDMs, we're going to look at EDMs actually after when it comes to price reacting. Oh, that's how I like to look at it, and that's how you've been taught to look at it. So as we said, let's look at the let mitigation potential. So what can we see? Well, we can actually see quite a bit of possibilities over here. So what you can see over here is price did cross the equilibrium line. It was pretty hard to draw. And you, of course, have that line like such. So price may, upon reversal, tap into that. Likewise, here on the 1M2, we have 5M, 1M lining up pretty nicely. And then, of course, the pullback itself, which can give the understanding that this could potentially be a let. Again, I'm not so set on it. It could be. Take the drawings away. And now what we can see, of course, is price reacts to the mitigation. 5M is not so easy to see, the mitigation. 1M, perfectly in the mitigation, perfectly over there. What do we also see? We see a 5M let, absolutely amazing. 1M, as you can see, it kind of went over. If I just look a bit closer, it went slightly over. Needless to say, it doesn't taunt our analysis or anything like that. Still pretty set. So yeah, 1M probably kind of just went over the line and slightly disregarded it as a let, but that's okay. That's completely fine. So let's actually see what the reaction is after our mitigation, because of course this is the most important part, is actually waiting for the reaction. Does it hold? Do we get induced ourselves? But let's see. And we do see that it did hold. Of course, you should be at break even at that point anyways. Super key that you are at break even when it comes to that. The planet after this is actually, again, another time frame one, which is the magic manipulation minutes. Now, this one is a questionable one, hence the question over here. It can depend. Sometimes MM1, MM2 may not necessarily show what we want or give signs for reversals or mitigations. It may not always appear, and that's okay. This is why you line it up with analysis. But of course, everything does go in the order of the planets, and that's the whole point in it being a guideline or a reference to refer to. In this case, MM1, we can't really see from our view here, so let's get a line in place. And it is roughly 10:30 Berlin time. Oh, that line's off. Yeah, so 10:30 Berlin time, which is right now the price action. From what we can see, or well, I can't really see anything at all, actually, so I would disregard it as any sort of timing-based reaction, because price is currently continuing the vectors. We're not actually even induced Asia low, or even not even at Asia midline at this point. So yeah, in this case, MM1, not really anything to show unless it's a continuation, which it looks like it is, but your trade is over here. So in that case, there's nothing to say about that. So we can actually speed it up to MM2. And now we actually see price does induce Asia low, which is amazing. So we have our first target of the day. So technically that is your target identification, which is stepping ahead a little bit. But the most important thing here is at MM2, which is in the middle over here, that would be 12:30 Berlin time, we can potentially get a reversal area POI. So this is pretty nice. We've had Asia low induced, potential MM2 reversal. So we can potentially expect some sort of reversal. Now, what I'm not actually looking for is an entry necessarily when it comes to the reversal. The reason being is because, firstly, I actually prefer to look for the POIs in the direction I'm still looking for. Just look at where price reacted. It's still within a smart money trap. Well, that's very bad to draw, but this is pretty much, oh my god. Okay, let's pretend that's a nice drawing. But you can see it's within this smart money trader or liquidity, I would say, box. So to me, it's not necessarily reacted in a very viable area that I can take a decent pullback trade from. Again, I also need to find a target. Targets are literally for every trade you take, whether it's a pullback, whether it's in the right direction. So you need to have something that's justifiable and not just take random stuff. So in this case, I actually would look for sells again to take out all of this smart money liquidity, which actually is not taken out at this point. And we've all even got a channel, that was off, a channel build up over here as well. So in that case, I still want to look for sells. But again, likewise, I still need to look for a decent entry for sells, something that lines up with my analysis. And only if it makes sense do I then take the trade. So let's clear up the drawings over here and see what we can expect. So when it comes to a POI, what is potentially the POI anywhere in our current price action line? This one may be a little bit tricky when it comes to the facts. Well, you could say this one, you could say this one, you could say this one. You could technically say three. Now I'm looking for something reasonable, something that makes sense, and something that can potentially line up with another confluence we might have in play. So in that sense, I actually would choose the closest one. The reason I choose that one is potential for actually an EDM. And what I mean by that is understanding where the entry helper is actually when it comes to the POI. So if we look over, well, this is going to be very hard to draw for me. Let's try drawing a straight, oh, okay. Okay, we're just going to try and understand that is roughly here. That one, oh, that one is there. Okay, my bad. This is so hard for me to draw. I don't know how people do it, but I'm trying to basically draw the so-called POIs, which are these two over here, on the entry helper, and how that can potentially help me choose a POI, especially with the fact I'm looking for continuation. And remember, continuations, what is the perfect trades for that? It is EDMs. So for me, the EDM, when I'm lining up these different POIs, actually lines up really nicely with this one. And the reason why is because that's pretty low over here. So if I expect a pullback straight from here, this reaction, the chances are is that it may actually give a very nice equilibrium line on the entry helper, which could give me an EDM. So that was one of my main reasons also for the sells. Keep in mind, EDMs also, I'm not expecting a crazy target, so that's also super key when it comes to that. These are like those very quick, at minimum 3-to-1 trades. So let's just clear that up and actually mark up what we can potentially see. And I did actually mention this, stepped ahead of myself. So we have obviously got the last planet on the Beely, and that was the EDM that I roughly drew up there. We can draw it up a little bit nicer. So that is the POI, the line I tried to kind of draw, and it lines up perfectly there. Can actually get a nice image there, which is better. And of course, what do we see? A perfect reaction. So couldn't be more clear. It's a really nice EDM, lines up perfectly in our POI. Actually gave a very nice pullback, nothing too long waited, I would say, or not very like messy pullback. It was pretty quick and to the point. So in that sense, what do we expect? What's super key first is with EDMs, understanding where do we target. This is a thing I think, I'm not sure if like how many of you take this seriously when it comes to EDMs. They're not expected to go on forever. So in this case, I will expect my EDM to just break below, literally like that. So yeah, the same line. Wow, I drew that spot on. So yeah, pretty much take out the low. It's usually a 3-to-1. In this case, from what I mentally can see, it's probably a 4-to-1 with my eyesight analysis going on there. So yeah, pretty much covered the Beely on London Open. Pretty perfect. And we can, of course, continue the day and understand what's going on. Now, in this case, remember, we did obviously cover the target for London Open. That technically would be your Asia low. It was very interesting price action, I would say. That technically were the vectors that led to Asia low. So technically you could close it there, but just waiting a little bit doesn't harm you too much because you've got a little low here, a random low off that reaction of smart money traders. So just clear that up. Now, the next thing, of course, is the reaction. Take a trade off, close it. The reason being is because we are actually almost approaching New York Trap. Now, before we go to New York Trap, I actually want to step back a bit and actually show you something so crazy. You've seen it before, so not too crazy, but just crazy when it comes to, if you were struggling to understand the direction for what's going on here in day, understanding cycle variations and stuff, I want to show you exactly what you would have seen in the Lit Madness. And this does relate to the daily cycle identification that you can see here, this beautiful pink planet. And it relates exactly to some of our common cycle variations. Just from your remembrance, should I say, what cycle variation do you think we were playing at when it comes to what you just saw? So we've got 5 over here. So you could obviously pause the video, figure out what it is. And once you're done, hopefully you get the right answer based on what you're seeing. Now, also just important, I mentioned this, sometimes things are slightly different, so important to factor that in. But the most important things are London Open and New York being pretty spot on when it comes to cycle variations. Merging manipulation minutes can change around a bit as well. So with that being said, we will actually bring up the chart side by side so we can actually understand properly. But I will just say, look at cycle variation 1 and now look at the chart we have. Just look how similar they are. It's actually insane how similar they are. So if we just actually mark up what we currently have, it is London Open up here. That checks off pretty perfectly. Even these points over here are POIs to the left. That also occurred. You can't see it on this image, of course. The only difference is the MM1 and MM2. In this case, it was the continuations after the reversals happened. So these reversals occurred, and then MM1 and MM2 continued. In this case, this one was already forming the continuation, and this one made a little baby reversal instead. This is why with MM1 and MM2, it's super, super key. They line up perfectly with the cycle variations. If they don't, then you disregard them. And that's what I did. I quite literally mentioned that. You can disregard them because they just simply will not line up in a cycle variation. Now, the only thing we're missing now is New York open, or New York trap open, I would say in this case, and London close. So with the cycle variation we have, where we've actually induced Asia low here, in this case MM2 did it, we are actually right now at New York trap, which I did mention. So what we can potentially expect is quite literally what we're seeing over here, which is New York to create a reversal, London close to potentially give us an entry, ideally some sort of mitigation like that, and then sell off. Now let's clear that up and actually draw a better illustration, as my drawings are horrible. So something like this in an easier format, that would be our ideal trade. Reason being is, as much as we can guess some sort of POI to the left, that's probably slightly off, isn't it? Well, I can't even draw that properly, but even if it's somewhere in between here, there, I'm not going to just take that as a limit. I want to, of course, wait for the reaction after. And this is also key why you take partials and you basically close certain trades, because when it comes to your New York trap opening right here after the EM has occurred, you can expect a reversal, and that might even cut into your trade itself and hit you at break even. So for sure, you should be taking off position actually at Asia low or Asia high, depending on, of course, the cycle variation. Let's actually bring up our original chart back, which is back here. So we're back on that chart. Now we have New York trap in the picture. Let's get that timing up a bit nicer, so it's pretty much spot on, maybe a minute or so, or 5 minutes. Slightly off, but we are of course going to wait for what New York trap does. If we can take again the same type of situation as the London Open Cup, which is the Beely over here or over here, then great. If not, then we will also disregard it. As I said, you only need one perfect trade, and London has clearly proven to be absolutely perfect. New York trap can potentially also show the same thing, so we obviously need to wait for price to react a little bit to see even our first thing, which is the break of structure. So let's actually speed it up a little bit. Yeah, so it's actually, again, as mentioned here, it's not the best when it comes to the confluences. You can even see here, it's pretty much liquidity going on. I don't personally like that, hence this will be an automatic no unless we get some sort of inducement lower to then continue. But keep in mind, New York trap has already started, so it's okay to just watch and again aim for sells based on cycle variation 1. So let's clear that up and actually wait and see what happens. Amazing. So now we are outside of New York trap. New York trap simply was the continuation. Nothing too clean. Actually, we even see that perfect inducement low of the liquidity. So when it comes to understanding intentions, it's absolutely perfect. See, just understanding the intentions is amazing. Like, you don't even need to take these trades, and they're just so perfect when it comes to understanding them. Like, I wouldn't take that, but it's absolutely perfect when it comes to literally everything you should know by now, even the basic lit cycle. With that being said, we are almost actually approaching our very, very last stage, which is the London close trade, which is pretty much the last thing we need. And if you remember the cycle variation, it will come across something like exactly like what we're seeing. We have the inducement high. I want to wait for some sort of reaction. And ideally, this mitigation here would be perfect to take sells and continue all the way down for our target down here. Something like that. A little bit neater, hopefully. So let's, of course, then wait for a reaction, as we can see. And our mitigation still appears to be there, which is great, because now we can, of course, mark it in a second. So now we can draw up a box, which is absolutely perfect. So the final trade of the day, absolutely perfect, especially with the target we have. So we can, of course, wait for the very last thing, and that's if we mitigate. And that is absolutely perfect. So I don't think there's anything more I can say at this point. Everything's been pretty clean. Probably went through it a little bit too quick even, or even waffled maybe also at the same time. But just take a look back on that cycle variation thing and how perfect this was, with only the MM1 and MM2 being slightly off. But when it comes to London close, New York trap, look how perfect they are. Reversal, this continuation down there. London close forms a continuation, which gives a perfect mitigation. And notice how all the trades I took were actually only in one direction. They were the only trades that gave the perfect confluences. So we even have that extreme mitigation. Again, didn't recommend that because that's the absolute extreme. But then we get the let mitigation here after that little break of structure down there. And then of course what happens as price continues is we get a nice EDN fulfilling the whole Beely requirements, only for price to then quite literally reverse at New York Trap. No trade at New York Trap, unfortunately. We could have utilized Beely again if it was a bit clearer in terms of confluences. Nevertheless, what happens in London close gives us the perfect sell entry. So it's just so clean. I don't know what else to say really, other than study it and apply the Litiverse. It's really powerful, and only apply when it makes sense. You don't have to utilize all the planets, you really don't. But what makes it nice is having these visuals. It really builds that picture in your head. So yeah, with that being said, I would say congratulations on making it to the end. I don't think this is the end video, but this is my last video with the chapters. Kind of sad, but at the same time, I hope you guys learned from it, and I hope you guys got some sort of value even from myself. And again, Discord is always there, so we'll catch up in the Discord if you have any questions. And that's pretty much it. So yeah, take care everyone, and we'll catch up soon.